Welcome back for another top-notch video. This week, guys, we'll be talking about the week of the 24th Feb through 28th Feb. Second month down for TSP and stocks. As always, our channel is about the TSP, the CSI and F funds, or you are in brokerage or Roth IRA / retirement accounts. We go over the ETFs, IVV, VXF, EFA, and AGG. What these are and what they equal is the C fund or IVV equals the S&P 500, the S fund or the VXF equals small caps, I fund or EFA equals international markets, and F fund or AGG equals bonds. That being said, we are ahead of all markets. We are beating markets by quite a large percentage. We are positive for the month where markets are negative for the month. We are doing very well on this channel, and we are beating the markets on the TSP channel. Please like, subscribe, or share. Kind of do a general overview, and then we go more into each one of our funds. So for this week, guys, the first thing we want to look at is that it is the end of the month. So we're going to look at what we got for the end of the month. So the top-notch channel, here on this channel, we end up getting a 1.83% return this month. That's pretty good. We were in the positive, did very well for this month. Majority stayed in the F fund or AGG, fixed income for the most part. We are up for our total year gain percentage is 5.76, almost 6% for the year, guys. Doing very, very well. Whereas, let's take a look at our markets now. With markets, we have the CS and I fund and the F fund. With the F fund, we are up 3.7%. I am beating that fund, doing very well on that fund. The C fund, that's AGG. The C fund or IVV ETF is down 8% for the year. We took a huge drop this week, over 11% drop for that C fund in a single week. That is monstrous. Where we were just up, we were almost up 4% for the month. That dropped significantly. That is a massive drop for the C fund, and then we are now down 8% for the year. Did hit the 10% correction area, so some concerns in there. We'll talk about those later. The S fund, or that's VXF, is down 8% for the year as well. Like I mentioned, we are up 5% for the year, so that is huge, guys. We are way above markets at this point, way above our 2% threshold. Usually, when we get back in markets, we didn't have any moves left towards the end of the month, so that kind of helped us out. Now that we are starting the month of March, we'll have more moves for the TSP, and we can get back into markets and take advantage of these low prices and low share prices moving forward. The I fund here is down 10% for the year, guys. That is nuts. That means we are 15% ahead of this fund as of right now. Our life cycles didn't even survive, guys. If you were in the life cycles or a diversified account, these are also down significantly for the year. So it really pays to just be watching your account ever so often. Buy and hold is good, only as good as if you buy and hold and stay buy and hold forever. If you sell anything whatsoever, you are losing out. So we like our strategy where we like to mitigate a little bit of risk. We started mitigating risk on the 18th of February and moved some funds out of the CNS fund, mostly 70%. Moved the rest on the 21st over to the F and G fund. And we've been hanging out there ever since the end of the month, waiting for more moves. Now that we got the end of the month, we'll go forward and show you guys kind of what we see in the technicals. But that is just that is incredible, guys. That's probably some of the biggest moves I've seen in my TSP career with some of these funds. So we are very happy to be out of markets for that. We're hoping to jump back into markets next week and pick up some of these gains. We're sitting. I'll show you on the charts where we're sitting, but it is pretty incredible just how that happened. On a chart perspective, if you're looking at the chart, the only one that stayed positive throughout this whole last week was the F fund. That was the winner fund for the week. And then all three of our equity funds did end up taking a plunge, with two of the equity funds over a 10% here loss, which is correction territory. We are in our correction. Usually with corrections, it's usually 1 to 3 months before we see that come out of a correction. So expect a bumpy road ahead for the next couple months. I'm expecting at least a couple whipsaws, guys, ups and downs. You might want to let things just settle a little bit before you start making trades wherever you're at. If you're out, I would maybe stay to the sidelines a little bit. If you're in, I would just buy and hold and keep on to those shares you have. We don't know where this thing's going to go, but I think it's primarily due to the coronavirus that is out, and there's a lot of fear about that. Granted, it hasn't really spread in the United States yet, so we could see these move lower, but we don't want to speculate. We're going to go into markets and show you guys the charts to give you the facts. So overall, pretty low on these three charts here, these three indices. Just crazy amount lost in a week. I mean, the 21st of February to the 28th of February, that is 1 week, guys, and over a 10% loss. That's incredible loss in a week. That being said, let's go into some of our comments. Tom from the TSP Talk channel has some comments. If you want to check them out, they have a great website. That's where we pull some of our charts. He mentioned this 5-year chart here. I kind of like that. It was an interesting show that when basically when trading volume hits around 4 billion shares, which is this line here that he put in, typically markets tend to bounce. Not saying it will or it won't, but we did hit that mark right here by the end of Friday, and our markets are still way down here. So just keep that in mind, just something interesting. Overall for charts, if you look at the S&P 500 or IVV or the C fund, we were way down on Thursday. And for the S fund, we were also way down. I'm going to show you more on our charts. And then the I fund, all these charts, guys, are pretty broken. We are through our moving averages. It didn't even stop at the moving averages, so that is just pretty incredible. Our high yield bonds are also falling. So, and then we have basically the 10-year Treasury is also falling, and AGG is way up. Since our Treasury yields are falling, they move opposite of each other. AGG has been moving up ever since. We've been in that fund for a little bit, so that is really good. Overall, let's go into our technical analysis for each chart. The first thing we like to look at is IYY. What is IYY? It's a general market fund. It shows pretty much all the stocks, what they're doing, what the market participants are looking at. So when we're looking at IYY, guys, this is incredible. This thing blew right through the 200-day moving average and kept going. The next line of support we had here was this line that was drawn in here. Saw a lot of support here all the way through August and October. We hit that on Friday. Now we'll have to wait and see where that bounces, or if it does bounce. But I have a feeling it's going to stay between that 200-day and this line here for quite some time, a couple months at least, before we get our feet underneath us. And we want to take advantage of these prices. We're going to kind of lock these in on Monday or Tuesday, and then just ride it out from there. 10% correction is pretty good. Now it could definitely continue downward, but honestly, guys, we want to take advantage of just this incredible discounted price that we're getting on some of our shares that we'll get to take advantage with our portfolio. Moving into stock market stuff, the technical analysis, long-term chart. What did we see for IYY? IYY was this PPO line, which is the price percentage oscillator, the blue line. Being above the red line, prices tend to rise, and we thought it was weird that the derivative oscillator was coming down here, and that line stayed above, and we're wondering why. Usually they come together and they go down together, and that's when it gives us a real clear signal. We thought that was kind of odd. This started going down towards the middle of January, and this price percentage oscillator line continued to stay above for a while. And right when we saw negative stuff coming in here, the weekly charts, we were getting really concerned. Prices continued to increase just a little bit here. This is price up here. And then we had the week, guys. This week here, just incredible movement downward. We saw our PPO line cross through that moving average. Moving average is starting to slump now towards the bottom of this chart instead of towards the top. Our derivative oscillator is negative. Typically, we see these anywhere from 1 to 5 bars. This other one lasted a little bit longer, this rally here, as you can see. But I wouldn't be surprised if we saw some ups and downs, some whipsaws. That volatility index is very high, so just be cautious when you're looking into markets. On a midterm basis, massive price downward movement here. We are outside the Bollinger Band, so we expect next week to come back into these Bollinger Bands a little bit. Price to move up just a tad bit, but we had three nasty negative price downward moving bars here. And as you can see with our moving averages, the derivative oscillator just blew through here. Thought we might see a rally here on the 2-day chart or the midterm chart. Did not be the case, and we saw our price percentage oscillator move through that moving average, and everything started heading back down on IYY. On a short-term basis, we see that 4-hour chart is trying to pull back through after that massive loss. And basically here, guys, it doesn't look that bad, but when I pull this chart back to look at what we've seen so far this year, it is quite a nasty fall right there. That is what we like to call a waterfall right there, guys. That is pretty nasty. That gets us all the way back to pretty much October time frame. That is quite a few months of gains lost there in that chart. So we're trying to see this 4-hour come back. Looks like it had a little bit of a rally towards the end of Friday there, but still down. Price was still down 0.92% towards the end of that day. So waiting to see on that. What we'd like to see is a cross on our 4-hour chart to get back involved in markets, or on a 2-hour chart. Even on a 2-hour chart, guys, this is every 2 hours. We have not seen a cross yet on the 2-hour chart. And here, another quite a waterfall-like plunge here compared to the rest of our markets. Pretty nasty. So we did see bars tend to break to the, it was kind of a fake out here, and usually that lasts 1 to 3 bars. It lasted 1 bar here and headed back down. We're starting to see a little bit of a green here, so maybe we'll see a bottom on this thing. But really like to see this price percentage oscillator cross here, or move this back into the derivative oscillator, move back into the positives, the green bars here, before we start making any moves back into that. Now, one thing with the top-notch channel is we tend to be okay with getting out of markets, but we're not that great with getting back into markets, because technicals are always a little bit on the slower side of things when seeing things. So we'd like to try and scale back in, especially with markets down over 10% year to date, markets down 8% year to date. We'd like to scale back in and really take advantage of that. So I'll be looking for a move for us, I guess, mostly on Monday or Tuesday, guys, to move back into these equity funds. But overall, just an incredible amount of price movement downward for these indices. Moving to the C fund or IVV, this C fund or IVV looks very similar to VXF, waterfall-like plunge. Support looks like we're down here at the 290 or 85 level. We'll wait and see there. We did not hit that here just yet. Like I said, we'll probably see some bounces in here before we start trying to make our way back up to the top. But definitely a pretty crazy week here with the charts. And again, I guess that's mostly due to the virus. We are not going to put our ETF allocations in just yet. We're going to wait till about Monday to see where things are going, see if there's any new cases over the weekend, kind of just have investors take a break and rest before they get back into it next week, because this has dramatically affected quite some amount of some people. I mean, these drops here are trillions of dollars of losses overall for the general big market picture. On a technical analysis for IVV or the C fund, on a long-term chart, weekly chart, as you can see, we had a plunge there. Our PPO line did shoot through our moving average. Typically when they shoot through the moving average, we start to see pressure on the downward chart. We did see that. We've been on our oscillator, we've been moving down for quite some time. That's our first kind of warning signal when we start to see these bars decrease here, these green bars into red bars. Sure enough, they did. We did see a little advantage here towards the beginning of February to take it, and we did take advantage of that. And then we popped out on the 18th or 19th of the month, and that was a good decision. On a midterm basis for these charts for IVV, also just a lot of price movement downward. Might see this come back into the Bollinger Bands into next week, so might see a reversal here or a whipsaw. Waiting to see on that. And then on a 4-hour chart for IVV, as you can see here, we are moving on our way out with that, but have not crossed that line yet. That's kind of what we're waiting for. See a cross on this 4-hour chart, because we'll just have to wait and see. We're just going to wait on that. Like I said, Monday or Tuesday is kind of when we're thinking about jumping back into the C fund and the S fund. That being said, let's move to the S fund or VXF. VXF did even worse than the C fund. It was really bad, guys. Look at this. Shot through this moving average here, left a huge open gap that'll probably have to be addressed in the future. Shot through the 50-day moving average and through the 200-day moving average with no resistance whatsoever, all the way down to this line here, back towards the August-October time frame, which is an excellent buying opportunity if you had your money outside of capital. If you are still in these funds, I would not recommend selling, because this is going to whipsaw all over the place. See how we had this month of August back here? We saw these giant whipsaws up and down, up and down. We're going to see something like that coming up in the future. It's with the volatility index so high, it's going to happen. So I would just stay put where you're at. If you are outside of stock funds, now would be a good time to start buying, because we have all this opportunity in here to buy. So I would start scaling in your portfolio with VXF. On a technical analysis for VXF or the S fund on a long-term basis, as you can see, looks very similar to IYY and the C fund. Saw that PPO shoot through that moving average, and with that big downward movement in price. Also, we've been seeing the derivative oscillator drop off since the beginning of January. Had to be really patient, guys, with this. This is always a warning sign when you start to see these big derivative oscillators start to drop off towards the backside, or moving down the mountain, like we like to call it. Now that we are down the mountain, we are now underground in a sense, and we do not want to be a part of charts when they are coming down the mountain or when they're underground. For the most part, we want to be coming up out of the ground or going up the mountain. Usually is the way I like to look at it, and that usually reacts pretty well with price. That being said, we did see on Friday the 14th of February a 0.16%, and then saw an increase on the 21st, 0.18%. We almost jumped on that, but our midterm charts, our midterm and our small term charts said hold the phone, wait a little bit. We decided to do that, and that was a great decision. On our midterm charts, as you can see here, markets were looking like they were going to come out here, and then we had a massive plunge with our PPO line crossing that moving average line, and our derivative oscillator dropping way off here into the negative underground with those negative red bars, and price reacted pretty significantly. Usually when Bollinger Bands are really tight, we expect a big move. We did see that big move, so that is what happened here. And yeah, guys, rough move, rough week. On a 4-hour chart, again, tight Bollinger Bands for price. We saw price really start to go down. Saw that waterfall-like effect here, and that is just a really steep decline. Now we are underground here, and we are coming out of the ground here with the 4-hour chart. We want to see that PPO line cross and have a clear cross in order to get back into these markets. We're waiting for probably Monday or Tuesday, or we might just pull the trigger on that day and put some of our portfolio into that. Now remember, guys, if you're a TSP investor and you're in the S&C fund, you only have 2 moves a month, so be very wise, especially making moves towards the beginning of the month, because a month can do there's a lot that can happen in a month. I mean, the month of February alone, you guys, we saw prices as high as 4% in a single month, and then drop all the way from that 4% down to below 10% for the month. That 1,000-point drops. That's very impressive volume and movement with these charts. That being said, let's move into the next chart, EFA. What is going on with EFA? EFA is a broken chart, guys. I said this last week, and I've continued to say this. I'm not really interested in EFA. It's international. There's a lot of stuff going international right now with the virus going on and everything else. Virus is spreading in a number of countries. I'm just not really interested in investing in this fund right now. It's just not that great of a fund. It's just all over the place here. The moving averages are just looking extremely nasty. As you can see, this 200-day moving average is coming up here. It looks like it's slowly starting to curve, and I don't even have anything down here, guys. No lines, nothing to put in here to show what this market is. I don't know how low this could go. I have no idea. I don't have anything to judge it based off of technicals. I would just stay away from EFA. I would not put money in EFA right now. Just look towards some other fund for right now. On a technical analysis for EFA, I will do that for you guys since we do it for all of our charts and stocks. EFA obviously had not a very big recovery from that time towards the end of January. Had about 2 weeks positive, but this chart, guys, has been flashing signals since beginning of January as well. Beginning of December, honestly. Charts did increase for quite some time, but if you had patience, it really paid off. As you can see, we're going down that hill with our derivative oscillator into negative underground here. Very in the negatives here. When will it come back? Do not know. We are outside our Bollinger Bands here, so we might see that pull back a little bit, but I am just not interested in EFA right now. Not the biggest fan of EFA, never really have been, but we'll see where that is. Look at that. That price goes all the way back, guys, to like mid-October, mid-September. So we lost about 4 months of gains in 1 week, about 5-6 trading sessions. That is quite significant. On a midterm basis for EFA, as you can see, we had a fake out here. Never did really cross from when we lost that price towards the end of January. Price continued to go down here, shot down here, and again, just waterfall plunge here. Pretty nasty, as you can see. That is very significant. Staying away from EFA on a midterm basis as well. And if you look at it from a short-term basis, looks like it's trying to come out like our other indices, but it's just not as strong as our other indices. Really would stick away from EFA for right now, guys. Not somewhere to be for EFA. If you have questions about EFA, go ahead and write those in the comment below. And lastly, let's talk about bonds, which is the highest performing fund for the year. Who would have thought 2 months into the 2020 that AGG, the F fund, is the best performing fund? Very, very interesting. So with EFA or the F fund, guys, we have that 200-day moving average, which is moving up quite significantly. we see that our moving averages are all in the right line here, 200-day, 50-day, and 20-day, all right where they should be. We are above this resistance line here. We saw a little bit of that in here. Now we are way above that. Markets might need to consolidate a little bit, especially with the Treasury yields so low, guys. Might see some consolidation on this fund for next week. Have to wait and see on that, especially if stocks get really volatile. You could see this drop probably a little bit, I would say, at least for the most part. So that is where we're sitting with AGG on a technical analysis. Long-term chart for AGG or the F fund. Where do we look? Where do we sit? So as you can see, we are coming out of the ground here. We saw that we were doing that all since November here. Didn't really see price reacting very well to that. Start to see the Bollinger Bands get a little closer in here. And then once we made this cross here, we start to saw a significant upwards movement with AGG or the F fund. Now we are outside those Bollinger Bands. I'm expecting it to come back inside the Bollinger Bands and rein in some of those gains for next week, but overall we are positive. This is where you want to start being cautious with what you have in AGG, just because it could start to drop off lower. Let's look at some of the other charts here, a midterm chart, or not a short term, but just midway chart to see where we're at with EFA. AGG. With that, we did see a fake out here on the 19th. That's right around when we decided to move our funds from stocks to bonds, and that was a really good point here. Good indicator. Good signal here. We did not cross with our PPO line. Stayed invested, stayed the course here, and we ended up picking up all these gains with about 70% of our portfolio. So that was pretty good. Now we just want to start being cautious because on the 4-hour chart or our short-term chart, we start to see this 4-hour start to come down the hill here. PPO line did not cross. Price is still going very strong here, but as you can see, our derivative oscillator dropped from 2.24 here on the green, the very bottom of that derivative oscillator, to 1.62 to 1.95, so we're starting to see that increase again. But we just want to be cautious with this fund. I'm telling you guys, markets they're just so volatile. It's not easy to make calls when things are extremely volatile like this. We got I would say, we look at technicals, and technicals are good, and we're not trying to beat the channel. We're not trying to beat the markets on this channel. We're just trying to mitigate our risk a little bit, and we just so happen to mitigate a lot of it this week. But overall, we're very happy where we're sitting with our different funds. Again, we're sitting up over 5% for the year. We gained 1.38% for the year. Mind you, both January and February were down months for the S&P 500. If we have a down quarter, if March is down for the next month, that'll be very interesting. That'll be more you'll have a lot more pessimistic and basically bears out there if we have 3 down months in a row. We are positive for the first 2 months of the row, and I'm going to put up these numbers just again for you guys, just to get these numbers in your head, just to see how crazy that is. If you look at our charts and what these charts did, that is just nuts. Look at that, guys. So I am sitting at, like I mentioned, at 5.76%, and these charts are sitting down negative 8% for the year, 8% for the year, 10% for the year. The L20 fund, which is a very safe fund, is down for the year. Everything is down except for that F fund, guys, and we are beating that fund. We are beating all markets by at least 2%, or our stock funds by almost close to 15%. That is incredible for the year. If you guys have questions or concerns, go ahead and write those in the comments below. Always like to have you guys follow along. Please like, subscribe, or share. We're going to go over our allocation. So going to our allocation, guys, here's where we currently sit in our funds. We've been in here since, I would say, the beginning, or the 18th of February. We've been about 70% in the F fund or AGG and about 30% in the G fund. We did make one quick little switch after that towards the 21st to get it to the G fund. But overall, we did very, very well with this swing trade move. We just got to get back in at some point. Looking to do that next week. And new funds, so the new funds for March coming in are going to go in the CNS fund. And then towards the beginning, like I said, Monday or Tuesday, based off of what we see with charts and our whipsaws and what's going on with the coronavirus over the weekend, we're probably going to get in the CNS fund, guys, and we're just going to probably hunker down and hold for where we're at. And hold probably for quite a few months. I would say probably for a couple months until we can start to see these clear up, or we get maybe a move towards the end of the month and we have some extra moves. But for right now, we are 70% F and 30% G, sitting in those fixed income and just funds that are just kind of safeguarding some capital And like I said, early next week we'll start moving those funds back. Pay attention, watch our Facebook and Twitter page to catch our moves. That's another Time Notch video. Please like, subscribe, or share. We'll see you guys next time.